So, Tiffany, you've got to give us the answer. What did that conversation sound like at Pimco this past week?
Well, I think the bottom line for us is certainly interest rates are coming down. The Federal Reserve, I think, has also been very clear about that. Powell, when he spoke at Jackson Hole, I think acknowledged the fact that monetary policy now probably doesn't reflect the underlying conditions in the U.S. economy. And if you look at the labor markets, we don't think that the U.S. economy is in recession, but nevertheless, the recent loosening in labor markets just suggests that there is some possibility for overshooting on that side. And in that kind of vein, the Federal Reserve should be focused on moving policy rates back to neutral. And I think the question at this point is just how quickly they get there. We think they probably will revise down their own estimates for the rate path in September. We're looking for a 25 basis point rate cut, but for them to really signal they're going to do a sequence of cuts here.
Tiffany, tell us where you think neutral is. If they revise the path down, what is the path to?
Yeah, I mean, I think that's a great question. So the Federal Reserve still believes it's between 2.5 and 3 on a nominal basis. And I think ultimately that's why they will get there, with not overnight. They're not going to move the policy rate there overnight because they're not exactly sure where it is. And when you're not sure, you want to just go slowly. Now, how slowly, I guess, is the question, and it's about balancing risks. You obviously don't want to take the economy into recession because your policy is too tight. We think a reasonable kind of baseline for them is to kind of write down a median rate path of kind of 3.5% by the end of 2025, could even be a little bit lower than that. And so that's the kind of pace, every meeting type of pace over the next several meetings to see how the economy responds, and then they can reassess and make a further decision from there.